Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after many fits and starts, the Australian dollar has managed just to keep its hands around the 71-cent handle. Although it was surprising that after the US job data, the market actually failed to stage any significant moves, and from the technical point still remains to a negative bias. Still viewing towards the top side of 71.50.65 as a supply zone, I do anticipate that the market will break down and eventually seek towards a target of 70.80 and then down towards the base, which is currently holding at 70.40.45. Any advances should not sustain. Well, looking at Friday, it was all about the non-farm payrolls number. And from that is that the market was surprised after the US economy added 196,000 jobs in March, according to the data released on Friday by the Bureau of Labour Statistics. Economists had polled at 175 after the previous month was 20,000, but revised up to 33. The US employment rate, meanwhile, remains at 3.8%. However, the average hourly earnings growth slowed to 1.1%, below expectations of 0.3%, with the previous month being 0.4%. So as we look at the market, you can see here that at present, the resistance is still locked around 112.50 to 112.95 to 113.10. It is assessed that the rejections from 112.50 is getting a little bit concerning, although the support at this stage is still holding quite well from 111.60 to 111.80. It is from my assessment that the market bulls need to react very, very soon. Otherwise, we could see a further challenge to the downside. A break beneath 111.60 would expose the region of 109.40 to 55, but not really coming out with that call yet because the RSI is still threatening to the upside, and we could still see in the next 48 hours a challenge towards that level of 112.50. I would rather prefer to start shortening the market around 113, as that's a more, I feel, reliable resistance than the minor resistance I see at 112.50. Well, the dollar yen has backed away quite sharply from the resistance of 111.60.85. It was initially at 111.60.65, but I stretched it by 20 points because I felt the market was attempting to try and break higher, but found supply, all the bears, come back rather sharply. From the decline this morning, it does look towards the region of 111.15 as support, and could see further lower to 110.70.80 to 110.30. I still expect to see any upside attempts to fail. Looking at this pattern on the pound, as we slowly bring it in, is that we have a descending triangle. Now, for some of us may or may not know that a descending triangle is a bearish pattern. There are instances when descending triangles form at a reversal pattern at the end of a trend, uptrend that is, and you can see here that this was a minor uptrend, and with the last candle being strong, has slowly depreciated. Regardless of where they form, though, descending triangles are of a bearish pattern, as I mentioned. Therefore, I do expect to see further risk into this week towards the downside. Now, at present, the level of 129.70 is the support, but from the measured move from the head to the bottom here, does give me a target of 125.55 if we see a break of 129.70. That is where I turn bearish. Other than that, the resistance at this stage is seen minor or modestly around 130.95 to 05. But all eyes on the downside as this pattern slowly confirms a potential break. The gold respectively holds above that level of 1,280 to 82. I still expect to see the bulls to be active around this level and eventually see a market press higher, as uncertainty still remains with the US and China trade negotiations, as they seem to be extending and continue to extend without any update to where or what has actually come out from these meetings that have been going now for some weeks. To me, the immediate target is around 1,300, and immediate at 95 is minor. A break above 1,300 to figure 02 would give further scope towards 12. From a technical bias, though, I do like this pattern, and it is slowly marrying up together, so therefore we should see a further rise. The top side target has been reached, I believe, at 63.64 as the market surged on Friday after the Baker Hughes announced that the total account of drilling rigs in the US surged by 19, or all up should I say, with 15 on the oil and gas on 4. Still a very strong number, which brings us a total of 831. After a recent string of declines, the market is actually showing some potential of maybe rallying further from a break of 64. I don't have that as such because I feel the market could actually still see a rejection from 64. So do be on your guard there. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new week.